All right, today we're going to pull back the curtain on one of the most exclusive, high-stakes corners of the entire financial world, hedge funds and private equity. You can kind of think of them as the VIP rooms of the investment universe. Ready to see what's behind that velvet rope? So what if I told you there's a whole world of investing that you're just not allowed into? For most of us, that's not a what-if scenario, it's reality. This world is very real, and it operates with a completely different set of rules than the stock market you and I know. It's a world of immense wealth, complex strategies, and some pretty high walls to get over. So how do they keep this world so exclusive? Well, just like any VIP club, there's a velvet rope, and there's a bouncer at the door. And in the world of high finance, that bouncer, it has a very specific name. And here it is, the accredited investor. This right here is the golden ticket. To become one, you've got to meet some really high income or net worth requirements. The thinking from regulators basically is that if you have that much money, you're considered sophisticated enough to handle high-risk investments without all the usual safety nets. It's the key that unlocks the whole thing. Okay, so let's say you've got the key. You're past the velvet rope. What's actually inside? First up, let's dive into one of the main attractions, the super fast-paced, high-stakes world of hedge funds. So what is a hedge fund? At its core, it's basically a private pool of money from all those accredited investors we just talked about. But here's where it gets really interesting: their strategy. Because they're private and have fewer regulations, they have the freedom to make all sorts of aggressive moves that your average mutual fund just can't, all in the hunt for huge returns, no matter what the market is doing. Yeah, and this is really how they do it. Hedge funds use leverage, that's just borrowed money, to supercharge their bets. They use complex strategies like short selling, which is where you bet a stock's price will actually go down. Plus, they have lockup periods, so you can't just pull your money out whenever you feel like it. Put it all together and you get a much, much higher risk profile. And that's a big reason why this world is so exclusive in the first place. So with all that risk, how do the fund managers get paid? Well, they use this famous model called 2 and 20. Basically, they charge a 2% management fee on all the assets, and on top of that, they take a whopping 20% cut of any profits they make. This creates this massive incentive to swing for the fences and take big risks to chase those big returns. All right, let's walk over to another room in this club, one that plays a totally different game. This is the world of private equity. See, these guys aren't about quick trades. Nope, they're in it for the long game. So, while a hedge fund is busy trading all sorts of assets, a private equity firm, they go out and buy entire companies. The whole idea is to take direct control, get their hands dirty, and actually improve the business from the inside out. Then, years down the road, they sell it for a huge profit. They're owners and operators, not just traders. Their playbook is actually pretty simple when you break it down. First, they acquire a company, and they often do this using a ton of borrowed money. That's what's called a leveraged buyout. Second, they get really involved in improving it, streamlining operations or cutting costs. And finally, after years of work, they sell the now much more valuable company. It's a super hands-on approach. And look, when we say long game, we are not kidding. Your money is typically locked up for 7 to 10 years, sometimes even longer. This is absolutely not an investment you can just dip your toes into and then pull out. And that brings us to this really crucial word: illiquid. Private equity is highly illiquid, which is just a fancy way of saying you can't get your money out. It's stuck. It is the total opposite of, selling a stock with a single tap on your phone. Okay, so we've seen the two big rooms in this exclusive club. They're both for the same type of wealthy investor, but man, they play by completely different rules. Let's put them head to head and see what really sets them apart. This chart really nails the key differences. For the investment horizon, just think of hedge funds as sprinters and private equity as marathon runners. When it comes to strategy, it's all about trading versus owning. And liquidity? Well, hedge funds have some lockups, but private equity, that takes illiquidity to a whole new level. To really put this all in perspective, let's just quickly compare them to something most of us are familiar with: mutual funds. On one side, you've got your mutual funds. They're heavily regulated, anyone can buy them. And on the other side, you've got hedge funds and private equity. It's almost like the Wild West by comparison. Private, way fewer regulations, and totally exclusive. So look, even if you're never going to invest in one of these funds, why should you even care? Because their influence on the entire economy is absolutely massive. So let's break down what you really need to remember. Okay, if you take away just a few things from all this, let it be these. First, the access is exclusive. It's a closed club. Second, the risks are way, way higher, and you have a lot less transparency into what's going on. Third, your money is tied up for years. It's not liquid. And finally, they just operate with a completely different set of rules than public investments. This is a fundamentally different world of investing, really built on access, risk, and a whole lot of patience. And all of this kind of leaves us with one last big question to think about. I mean, these funds control trillions of dollars. They have a huge impact on the companies we work for and the products we buy. So given just how powerful and secretive they are, should they be more transparent? It's a really interesting question, just something to think about. Thanks for joining me.